Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. If you want to sign up and have any issues with anything, check out finding-value.com. That's where we go over individual stocks, individual companies. We do have question and answer sessions on the weekends, and I give midweek updates on Wednesdays. So if you're interested in that, check out the description link below for discounts. All right, so let's dive in. Let's take a look and see what is going on today, and I can give you my financial opinions. I'm going to start with the DXY, and let me tell you guys, we are ripping to the upside in the DXY, which is also being followed with very strong moves in yields across the entire yield curve. So DXY is getting stronger. So what does this mean? Why do I go over the DXY and yields? Yields is the bedrock that all assets get priced off of. The DXY is what we'll call it just an indicator of our monetary strength versus the strength of other currencies. That's all it is. So DXY getting stronger and yields going up may price anything that's priced in dollars is going to have a little bit of a headwind with that outside of a few assets like oil. Yields don't impact oil as much. They impact gold quite heavily. Real yields do. And a lot of the precious metals will be impacted by this. But at some point, if people get afraid of the currency or the bond market first, then the currency second, gold could start to rally even in an increasing interest rate environment, much like the 1970s. In the 1970s, we had peak oil in the United States, and I think something similar could come in the end of the 2020s worldwide, which could impact a lot of currencies worldwide. So dollar's up today, and it looks like that could continue. We've got monster moves in yields today. Monster moves. Up 2.43% in the 2-year. That looks like it wants to go higher and continue higher. The 10-year's up 3.3% today. Big move on the 10-year. Total shakeout of this falling, I'll call it a falling, not a falling wedge, but falling flag pattern. Breakout, and then boom, it's a slingshot to the upside. TYX also up 2.84%. So the entire yield curve is rocketing higher to the upside. And I don't know if Powell just did a major shakeout to a breakout. But again, guys, we're seeing major moves in yields. Now, let me guess, with these yields move and what we just went over, I'm going to take a guess of what these sectors will do. REMX, lithium, and all renewable sectors will go down due to increased strength in yields. Gold and silver will go down due to increased strength of yields in dollar. We're going to see the S&P 500 and NASDAQ probably down or sideways. It's had a lot of momentum, upward momentum, but this is continual big moves in the 10-year. Oil is going to be flat to slightly higher with yields like this because it doesn't really get impacted as much. And then we'll see what other sectors are. Emerging markets will probably go down because of the stronger dollar. And that's kind of my guess, just going forward and guessing. TYX TNX ratio has inverted further, which is a headwind for gold. We're still at very low levels. And I don't know if yields can come back down. I don't know. I mean, maybe the credit crisis or just the amount of bonds that are going to supply the market, maybe we have some weird distorted yield curve. And I don't know what yield curves normally do if a currency is struggling with a gigantic amount of bond issuances. But we'll continue to monitor it. That's inverted further. TLT bond prices rocketing lower. It's back to that support level. that we came from. We're getting a lot of volatility in bond prices and yields. And then the 2 and 10-year, we have uh, it uninverted because we had it uninverted as we went up. The 10-year was massively higher and the 2-year wasn't as high. So this went down even though we had a yield curve that shifted upward, but the long end of the curve shifted up more, which is a bear steepener. Gold was slightly lower today. It's holding in there though. I mean, we've got a wick at the bottom. It wasn't just a flat out selling pressure day, but we are down 12 bucks an ounce like we thought with yields going up. But I'm looking to see when will this relationship between down yields and up gold, when will that break where we will have up yields and up gold? Much like the 1970s. I think it's coming. I think it's coming. Silver is also down today, 1.6%, but we're still within the squeezing up of that and the support trend line. We're still squeezing up and we're still within support. Even if we lose this, I don't think we have a ton of downside. We may just drift a little bit before heading higher. Platinum up $5. That's looking pretty solid for platinum. Looks like we were at support. Maybe we got a little trend line going there. And then palladium's also up $7. This looks like it's trying to bottom. It's trying to bottom out. XAU to gold ratio is down. We had gold and silver mining companies down more than gold itself. And we had, I think oil was up. I'm just looking down below. Oil was up. And with gold being down and oil being up, that's not a good mix for gold and silver mining companies. We need gold and silver to outpace inflation for this to really start moving. The CRB index slightly, it's holding on slightly higher for the CRB index. There we are kind of zoomed out. I think that this is going to go up, the CRB index. Now, in the short term, we're just flopping all over the place. But I think over the longer term, we'll keep grinding higher. CRB to S&P 500, we're up a little bit today. Nothing really to talk about. I mean, it's up a teeny bit, about 0.5%, but it looks like it's trying to bottom. We'll see if this bottoms here. On the weeklies, it looks a little bit weaker, like it still wants to go lower. But we'll see if we can get some strength in that. GDX down, GDXJ down, and SILJ all down today. Is this kind of a pattern where we head lower? Could be. It could be. Again, when things start going like this, I kind of just back off and wait. I wait for a potential bottom, a strengthening in the candlesticks, and we just don't have that yet. We've got crude oil up 0.8%, right on support. I do think this is going to turn and head higher. We continue to eat through inventory. We've got far more demand than supply at this time, and inventories are dwindling lower. The last big production growth has come from shale. We've got offshore Guyana, but I don't think that's going to be enough to really offset the declines around the world. I think we're getting close to oil being incredibly tight for a very long time. Supply problem. TTF gas down today. It looks like it's trying to bottom. We've got a downtrend line that's broken, and I bet you we'll move around through here. Natural gas in America looks like it's trying to put in a bottom here. We're at a very low level, a little over $2 an MMBTU. So I mean that is there. We're gonna pull back on production if we stay down here, guys. There's some natural gas producers that do not make money at $2.08. XOP, yeah, you know me. We are basically trying, I think, to put in a bottom where we're at. We'll see if oil can turn. If oil can turn, I think this is going to turn higher. We do have a bullish engulfing here, and that is generally a good sign to go higher. So I'm still bullish. That's on the weekly candlesticks there. We've pulled back a little bit today. It was bought up a little bit, and I think we'll probably try to put in a bottom here, hopefully soon. OIH also a little bit lower, right on support. We've got a wick. This is a hammer candlestick. That generally means that we could potentially bottom. We'll see if that actually occurs. And what I'm looking at here is basically a downtrend line that has broken just recently, and that we could potentially head higher from that broken downtrend line. So we'll see. Again, we will see what occurs here. There's your squeeze up there, and then a false breakdown for a potential slingshot to the upside. And we'll see if that occurs. Sprott Uranium Trust, it is down a little bit, but it still looks good, and the momentum is still to the upside. I think we go higher. I think we'll just continue to grind higher. URA up or down 1.6%, filling that gap that we had. That's filled, so maybe we can start to get moving to the upside again. Momentum's to the upside. URNM also filling the gap, and the gap is filled. So we'll see if we can get some upside momentum. We are at and above all-time highs. We broke out. We did a retest and a gap fill. Jumped again, did another gap fill, and I do think we'll continue higher. URNJ also filling that gap, and it still looks good. We've got nice big wicks at the bottom of these candlesticks, meaning that the momentum is starting to come back up throughout the end of the day. So it still looks good. TAN lower, just like I thought, with the yields rocketing on up. Momentum is still to the downside, and we'll see if it can put something together here to try to turn. If yields continue higher, it's going to be going into a strong headwind. COPX also down, which for some reason copper is very sensitive to yields. Lower yields, copper's been going up. Higher yields, copper's been going down. We had massive move in yields today, and copper sold off. Lithium also sold off, and the momentum's to the downside. Again, think of yields. REMX also down. Think of yields. If yields continue to strengthen, these will continue to be under pressure. We've got S&P 500 down slightly, 0.32%. Still looks good to go higher. Yields slowed it down. The momentum is definitely to the upside. I think that this is probably a blow-off top in the S&P 500, and it will crash after this top whenever it does peak. NASDAQ is the same way. We've got another blow-off top that's occurring. It still looks good to go higher, and we've got just a small down day, and that's all those big yields could do to these stocks, the big move in yields. So momentum is definitely to the upside. KRE is down with the yields going on up. We were down a little bit today, and we're back at support. We've got emerging markets actually being very strong today. Big yield move and dollar move, and we were up 0.13%. That's showing a lot of strength. A lot of strength coming out of emerging markets with those market conditions. XHB is lower, down 1.4%. Again, big yield move. It doesn't like it. MOO is also down, another interest rate sensitive asset. I think this is going to go to 69 bucks for a retest. Copper down, again, big move in yields, and we've been pulling back with that big move of yields. We're still within the pattern though, and still looks very good for a potential move higher eventually. We've got iron ore down a little bit, 0.7%. It's trying to put in a bottom at some point. Momentum is definitely to the downside for iron ore. We've got aluminum also down, does not like the increase of yields these past few trading sessions. That is what's causing the move of a lot of these base metal and rare earth metal companies. Baltic Dry Index up. It seems like this moves with oil, and oil was up, so it was up 1.4%. We've got Newcastle Coal up 3.13. I think this is a good entry point for a lot of the coal companies because I think this is trying to bottom here. Bitcoin is slightly lower. It's hanging in there though. It's right at support resistance in this kind of zone here. Lots of buying and selling pressure, and it's stuck in that zone. Same with Ethereum. Lots of buying and selling pressure occurring, and it's just moving sideways today. So not much to really talk about there. That could go in either direction. We've got a lead in for the move lower, but we also don't have a ton of selling pressure on the back end here. So it could go in either direction. It's kind of, I'll say it's at support and it's squeezing up at the same time. So that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. There's discounts in the description link below if you guys want some. And that's what I've got. I'm watching oil. Oil is the master commodity. That's the one I'm watching. Are we going to bottom here and turn? We continue to eat through inventory. We are using more than what we are supplying to the world. Some people will say, then why is Saudi cut production? Well, I can tell you they're when you look at some of the drilling companies, they are drilling more. Maybe they are struggling to increase production, and maybe that's why they canceled going up to 13 million barrels because maybe they can't hit it. And they don't want to send a false signal saying that we're going to go to 13, but they can't produce 13. So maybe they're already implementing that, and maybe they're going to try to hold at 12, but they're struggling to hold, even though they're deploying more and more drilling rigs. At least that's what I've heard for some of the drillers. They're putting more rigs into work in the Middle East, and I don't see a move up in production. So the world could be struggling to increase production. That's what I'm watching at this time. If that is the case, and I'll go over a little bit more information uh, tomorrow and I'll share it on Twitter. But if we do struggle to increase production here from 2024 onwards, the world might look a little bit different than what we have today. It might look a whole lot different, and what it's going to feel is it's going to be a lot bigger struggle in terms of affording things. So, and I'm sure people are already feeling that. That's from the monetary side. This will be from the supply side. So it'll be the combination of monetary expansion at the same time that we've got supply constraints. Very bad mix. Very bad mix for inflation. But that's what I've got for today, guys. So we'll catch you next time. This is Finding Value.